Wasted money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can't be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Afternoon, everyone. It's Jim here. Welcome to the second in our series of live streams as we start to gear up for the summer A-level business exams. I'm joined by Graham, and today's topic, Graham, is...
It's capacity utilization.
So we've got about 30 minutes or so of live fun and frolics. Graham usually says we use the word fun advisedly, but you know the score. It's a mixture of questions, MCQ, a few warm-up MCQs, some applications, some calculations, and a mini case study, all on the topic of capacity utilization. If you're joining us live, welcome. Please say hello in the live chat. And when you're doing that, also click the like button to alert other YouTube users that we're live, and also to annoy Team Economics who've just finished. And Graham, do you want to explain how the session runs, roughly what we're going to be covering?
Okay, so we've got the usual blend of a little starter activity, MCQs, a couple of calculations, our completely random application spinner. And we're going to finish off with quite an interesting case study on the airline industry, Jim.
Perfect. What we normally do in these sessions is start off with a warm-up activity. And don't forget, all these sessions are recorded as well. So just as people are coming in, a little warm-up activity. Graham, do you want to take us through this? I'm just going to start looking through the live streams to see who's first to get the answer.
Okay, yeah, so clue number one. So all you need to do is work out the name of the business by the clue. So this clue was, this business was founded in 1982. So if you think, I know a business that was founded in 1982, well then please type that in the chat window. You've got to be in it to win it. Amazon could be, but unfortunately it's not in this time. Katie, thanks for having a go though. Let's have a clue number
1995, I think, was Amazon, I think.
Is that what it was?
Yeah. 97.
So now the owner founded the business with a £6,000 redundancy payment from W.H. Smith. Now that's quite a telling clue, that. So obviously someone who was working for WH Smith who's been made redundant got £6,000, useful for source of finance, and set up a business in 1982. So if you're thinking, I know someone who got a £5,000 redundancy payment from WH Smith, it can't be that person. This was 6,000. Shall we have a look at clue number 3? Now, I think we've got someone in the chat window already, Jim.
We have.
I think we may have. So this first shot was in Kensington. So keep going if you haven't got it all. Well, there we are.
James was
has
first.
revealed. Yeah, so this was a real novel question, this one. The business now has around 311 shops. British book retailer. And the answer is, of course, Waterstones.
Don't often get the clue done by clue 3, do we, to be fair?
No, but someone obviously put the fact that I think it was a W.H. Smith clue. Really. I think it was a W.H. Smith clue.
Fair dues. Estelle, William, and all the rest have got it. So, I think the challenge is set for us tomorrow, isn't it, to go really, really hard, really difficult.
Yeah. No clues. Just guess the business. Okay, shall we have a look at MCQ number 1? So capacity and capacity utilisation, a very frequently examined topic across all A-level business specifications. Do you know the formula, though? Is it A, B, C, or D? Type the letter in the chat window. Having looked at all 4 possibilities, it is definitely something to do with actual output and maximum possible output. Do we know? Can we work it out? So lots of answers coming in, which is great to see. Lots of correct answers. A couple of incorrect answers. I think we're split between A and D. So and if you were going to get a wrong answer, I think one of those would be more likely. The answer is indeed. Should we reveal the answer, Jim? It is D. Remember, it's capacity utilization is expressed as a percentage. So you would need to multiply that by 100. Now, in some exam boards, if you fail to do that, you won't get full marks. Remember, you've got to have your percentage sign for capacity utilization. So well done. It is actual output divided by maximum possible output times 100. Well done.
Yeah.
Shall I look at the next one?
Okay, so this one is, AQA students be familiar with this format, but it's a great way of revising the topic for any exam board. So 2 statements here. Just tell us whether you believe each one is either true or false. So statement 1, a business with low capacity utilization is likely to have flexibility to handle surges in demand. Is that true or false? And statement 2, a business with excess capacity has a capacity utilization of less than 100%. Is that true or false? What do you think? So some combination of those will reveal the right answer. I'll give you a clue on this one. It's either A or B or C or D. It's one of those 4. A few more seconds. And I would say 95% of the many people, we've got over 240 people, 200 people in the live chat at the minute. I said answer A, which is correct. It is. Yeah, so I mean that you would argue there aren't many, but that would be a benefit of low capacity utilization, wouldn't it? If there is a sudden surge in demand, you can maybe better able to handle that, to increase production to meet it. And of course, any utilization of less than 100% must mean you have some excess or spare capacity. OTG.
Great work, everyone. Great to see Mr. Owlet again back in the chat window there. Well done, sir. So last year, a business produced 400,000 units. The capacity was 500,000 units. What percentage spare capacity did the business have last year? So that's what we want. So last year, a business produced 400,000 units. The capacity of the business was 500,000 units. What percentage spare capacity did the business have last year?
Good question.
It is a good question, and it's throwing a lot of students. It is throwing a lot of students. It's really 2 ways you can work it out, actually. Well, there may be more. I'm only familiar with 2 ways. There's 2 ways I'm working out. There's a really quick way, and there's a way that's not so quick. A couple more seconds. So the majority, it's split between A. I think it's 50-50 between A and B. Yep. Isn't it? It's split. Should we find out the answer? It's 20% because the question was spare capacity. So a lot of students had worked out the capacity utilization, which was 400,000 divided by 500,000 times 100 to get 80%, but this was spare capacity. Now, two ways you could have worked this out. 400,000 divided by 500,000 times 100 gives you 80%. 100% minus the 80% gives you 20%. I simply worked out 100,000 divided by 500,000 times 100 to get 20%, recognizing that there was 100,000 units of spare capacity. That's what the question asked me to do. So 100,000 divided by 500,000 times 100. Well done, everyone. That was a really, really tough question. Well done.
You haven't got this one as well, then, G. I think this is a really hard question as well.
Okay, this one. So pay careful this one. This was actually an actual exam question that we've sort of changed slightly. So read this very, very carefully. Read it carefully. Last year, a business had a capacity utilization of 60%. This year, it aims to increase its capacity by 20%. If it produces the same number of units this year as last year, its capacity utilization will be, is it 33.33%? Is it 50%? Is it 80%? Is it 40%? So we're getting lots of answers through here. This is a hard question.
I guess the way to answer this is to put a number to it, isn't it? Let's say the business had a capacity of 100 units.
Yeah.
And then work through.
Yeah. I think it's clear what some students are doing here is they're either adding the 60 and the 20 together or deducting 20 from the 60. We're not dealing with, dealing with two different concepts here. One's capacity utilization, one is capacity. So the two completely different concepts.
Yeah.
Completely different concepts. It's Mr. Owlett got the right answer, so that's always pleasing. Well done, Richard. So shall we reveal the answer? It is B. So let's try and unpick why that is, because this was a previous exam question. If we strip it back, 60% capacity utilization really means for every 100 units the business could produce, it's only producing 60. So if the business had a capacity of 100 and it was producing 60% of that, that would be 60 units. But its capacity is increased to 120 now, so therefore we can assume it's 120 units. 60 divided by the 120 multiplied by 100 is 50%. So it's really, really important to understand the different concepts between capacity and the utilization of capacity. Well done, everyone, though, for having a go. That was a tough question.
Tough question, no doubt at all. So let's work our way through this one, G, shall we, together? We've got a table here that shows different elements of the costs of a business. So on the left-hand side, output in units. The capacity, how much we could make, 1,500 units. We've got some missing data, numbered lettered A, B, C, and D. And we've also got some information around the costs, the fixed cost of the business, 21,000, the variable cost per unit, and applying those, working out what the total costs are. So a bit of calculations to be done here, which we'll set the clock going. So can you work out either or all of A, B, C, and D? So A and C are capacity utilization percentages. B and D are unit costs. Let's start the clock, shall we, G?
Yeah, let's start the clock. So if you're unsure why the clock's ticking, have a look at the completed line where you've got the capacity utilization, but more importantly, you've got the unit costs. So unit costs is a common concept across the specification. So can we work out the unit costs and the capacity utilization for 300 units and 1,200 units? So Millie's ploughing through. I've been watching Millie's answers come through the chat window.
Loads of answers coming in. Rupert's had to go at all four there. Stick that on the screen. Well, I better take it off so you can have a look at the data.
Good piece of advice there from Mr. Owlett. You know, these live streams is always useful. Can we get Mr. Owlett to comment on screen there? Because I think it is really useful there. I think it is really useful to have a piece of paper and a calculator, a calculating implement, always valuable. And I think the majority did really, really well there. And I can only see, I think, correct answers. So
I think Becky's on the screen there. Becky was one of many who had managed to get all four elements of those done in 60 seconds, which is phenomenal.
It is really good. So what's interesting about that is, well, what I find interesting is that as capacity utilization increases, unit costs go down, and that can only be because the fixed costs do not change in relation to output, whereas the variable costs, total variable costs, do change. Because the fixed costs remain the same, that means the unit costs reduce. So if we have a look at that, so if this business only produces 300 units, the unit cost would be £120 per unit. If it can increase its capacity utilization to 80%, because those fixed costs don't change, unit costs will reduce to £67.50. Not far from 50% reduction, really. So that just shows the benefit of high capacity utilization to businesses, and that's why it's often a key operational objective. So Morgan there, the formula for unit costs is just the total costs divided by output. So I think, Morgan, we met at Newcastle. I'm sure we did. I think I've got the name right. So it's total cost divided by output. So
Yeah.
36,000 divided by 300 is 120. 81,000 divided by 1,200 is £67.50. So really, even if you just understand the concept of the fact that as capacity utilization increases, unit costs go down. But in an exam, if you had to use that line of analysis, it's important to explain how and why. You can't just say as capacity utilization increases, unit costs go down. That's knowledge. You'd need to explain how and why that is the case. So
Superb.
well done, everyone, for having
Awesome.
a go at that.
We'll take a break from calculations just for a minute or two, and we'll have a go at some application. And it's one of our favourite ever activities, the application spinner. And what we do here is we pick a topic, in this case, the benefits of high capacity utilization, and we ask you to apply it to one of 6 businesses, and we'll spin the spinner to see which one it is. Let's do that. Let's put the spinner into action. What do you want this time, G?
EasyJet.
Okay, I'll do my best to. No, nowhere near. Almost View Cinemas, but it ends up being Ford, which last time I looked was a motor car manufacturer. So over to you in the live chat. Can you give us a benefit to Ford? And we'll stick a few answers on the screen as well. To Ford of high capacity utilization. Now, don't forget with the application spinner, what we're looking for here are some words in your answer that make the answer about Ford, about car manufacturing, rather than say about selling pizzas or flying people or selling rooms in hotels. That's what we're looking for. And I'll just pick out some of them as they come through. Let's stick one of the early ones on from Katie. What do you think to these, G? I'll pick some more out. You go through them.
Yeah, they would have lower unit costs, so therefore produce more cars, therefore will make a higher profit. Yeah, it's a good line of analysis. So if that was in an exam, obviously...
Yeah,
sorry.
Going, yeah.
So you would explain how and why that's the case, but here high capacity utilization will allow Ford to become more efficient, lower their average costs. So yeah, that reducing unit costs frees up more money perhaps to invest in R&D in the electric car market. That's a really good example, some really good application there, talking about electric cars, efficiency, so rooted in the industry, which is really, really good.
Let's pick a couple more out. There's so many good ones coming. So often, if you just wait a few seconds, you get a sudden surge of answers coming through. Let's have a look. Just picking a few out. Let's put IADS on. It talks about a benefit being spreading that, as we saw in the table before, spreading out the fixed costs over larger quantities, allowing them to have a lower marginal cost for their vehicles. So the use of the word vehicles makes it all about Ford, not about Pizza Express or Apple.
Can I just pick up on one or two? I'm just picking up just a couple of misconceptions of 2 or 3 answers I'm seeing, and it's worth picking up on, and it's a common misconception. So I think some students confuse capacity and capacity utilization or think they're the same thing. So I'm seeing a lot of answers where students are saying high capacity utilization allows them to produce more cars. That's the wrong way around. Capacity utilization is the production of more cars. So increasing capacity allows a business, would allow Ford to produce more cars. Capacity utilization is how well they utilize that capacity. So the two are, although linked, they are completely separate topics. So it's really important to be really on point with your knowledge and understanding. So increasing capacity allows a business to produce more. The utilization is how well they are utilizing capacity. So,
Yeah.
so should we just reveal what we had, Jim? So we've got on screen. Do you want to take us through this one, Jim? Or do you want me to take us through?
No, that's fine. So, I mean, what it tries to do is demonstrate a chain of analysis, but also some application. So the same answer about a benefit of high capacity utilization for any one of those 6 businesses should be specific to that business or that market or that industry, and shouldn't be capable of being applied to the other 5. So in this case, we talk about the fixed costs of Ford. Okay, but what sort of fixed costs? Well, factory rent, that makes it about a manufacturing business, and paying for the production robots. Well, last time I looked, Premier Inn and Pizza Express don't use robots. So it's definitely about Ford. And then it's the analysis, isn't it? So spreading those fixed costs out over more cars. A consequence of that is that the unit cost per car falls. A consequence of that is that Ford may be able to, a hedging word, may be able to, not won't or will, but may be able to lower the price of their cars and still maintain the same margin because their unit costs are lower, and that may benefit them. So trying to complete the benefit, and the benefit here is more sales, presumably, because the demand for their cars is sensitive to price, particularly against competitors such as Nissan and maybe Toyota or Skoda. So that's just an example, isn't it, G, of a chain of analysis that's got application that's specific to Ford.
Yeah. Hedging words picked up in the chat window. Use words like is likely to, could lead to, perhaps will lead to. Makes a difference at the top end. Shall we
Super. Well
carry
done.
on? Oh, would you believe it? It's another calculation. So last year, a business produced 400,000 units and achieved a capacity utilization of 80%. This year, the business estimates that it will produce 450,000 units, but the capacity will remain the same. Based on that information, can you work out the capacity utilization? Jim, start the timer, please. So this is a sort of capacity utilization question in reverse. You're given the utilization, you've got to work out the capacity. Once you've worked out the capacity, you can then work out the capacity utilization. So we've got it all going on here. And Harry's, I think we might have to call 999, Jim, because Harry's on fire. Straight in there. Answer within seconds there. Let's hope it's Anderstel. Let's hope it is. Let's hope it's the right answer.
Could be.
Banana's got the right answer. Good to see Banana didn't slip up there with the with this question. So lots of right answers coming in. Oh, and I can't read my screen now, but there's a bit of working out there. Brilliant, yeah. That's what we want. That's what we want. So clearly showing, and that is a really good technique, that is to show some of, if not all, your working out. So really we could have shown the working out for, the 400,000 divided by 80 times 100 would have shown the working out where we got the 500,000, but that is all good. That is textbook stuff there. Shall we reveal our working out?
Yeah, although I think we've already seen the correct answer, haven't we? But here's one way of working it out, yeah.
Yeah, that's correct. So this is how you got 500,000 units, 400,000 divided by 80 to find out 1%, times it by 100 to find out the full capacity, which is obviously 100%. Then our capacity utilization formula. Then our answer at the bottom there, estimated capacity utilization this year is 90%. If you just wrote 90 down, there's a chance you wouldn't get full marks. So especially if you're an AQA student. You've really got to be tidy up those units. So if it's a decimals, 2 decimal places, if it says that, percentages, pound signs, things like that. Little things make a big difference.
Mo says this is like maths revision as well. Well, we aim to please, don't we, Graham? I mean, probably the level this is at is probably slightly higher than A-level maths. I don't know. I'm not an A-level mathematician. Maybe let me know in the live chat if that's a fair comment. But it's great that we're able to do 2 subjects at the same time.
It is, and Richard there saying about, can we comment on the use of percentage signs, which I think I'd already did, so he must have been typing that out as I was waxing lyrical. But just to reinforce that, pound signs where appropriate, percentage signs where appropriate.
Okay, let's move on to, again, just take a step away from some calculations. We've got a couple of give me activities, and the idea here is we invite you to spend a minute or 60 seconds, if you want a bit longer, type into the live chat some responses. And here's our first one. Can you give me and Graham some ways of increasing capacity utilization? Lots of different ways of doing it, but maybe if you put one in the chat and just explain how that works. Let's start the clock for a minute.
Good point about Florence there. Sometimes, depending on the exam board, you may get questions where they're in euros and dollars, especially if there's an exchange rate question. That's a really good question, Florence, actually, about could you get questions with alternative currencies? And the answer to that is yeah. The answer to that is yes. You may have to decipher an exchange rate chart and things like that. So that's a good question.
Just looking at the question, quite a number of people are talking about ways of increasing capacity. That's not the question. We want ways of increasing capacity utilization. Casey's got the right idea. That's a great one. Reducing the number of employees, reducing the amount of space, all that kind of stuff.
Often not use that method there. A lot of students think the only ways to sell more units when actually reducing capacity is really easy.
Yeah, most answers coming in are about increasing capacity, whereas actually we were looking for ways of making capacity utilization, the percentage. That's the output divided by the potential output. That percentage go up. Snap Bandit has got the right approach here. Yeah. In other words, reduce the excess capacity, take out unused or spare material, that kind of stuff.
I think this really underlines, Jim, doesn't it, the often confusion between capacity as a concept and capacity utilization. They are two similar concepts, but so different.
Yeah, well, I'll tell you what, we'll go through three possible ways just to help explain the difference, and then I know we've got another one that follows from it. So if we want to increase the percentage, the capacity utilization percentage, we either need to reduce the bottom bit, the potential capacity, the potential output, or increase the bit on the top, which is the actual output, isn't it, or the actual volume that we sell. So that's number one, reduce capacity, reduce the bottom bit of the calculation. So if we've got spare capacity, then get rid of spare capacity, close down a production line, shut down a factory, whatever it is that means that your capacity is too high, you reduce. And of course, that has costs and that has implications, but that's one way of doing it. Another way is to sell more or make more. So therefore, one technique would be marketing, better marketing or more marketing. For example, I don't know, thinking about Premier Inn, we mentioned earlier there as one of the 6 businesses. Their spare capacity will be an empty room. So maybe their marketing could be around trying to encourage people to come and book a room in particular locations that have low utilization, or a particular time of the year, or a particular day, or whatever it is that tries to fill more of the rooms compared with how many they've got. So, but in other words, try and sell more or produce more. Marketing would be a way of doing that. And I think this third one's quite interesting, subcontracting. I think it's actually explicitly mentioned in the Edexcel spec, which is offer to use that spare capacity for your customers. So let's say you're a ready meals factory and you've got capacity utilization of 50%. That means half the time your ready meals production is lying idle, not making anything. So why not offer to make meals for maybe a different business, another brand? In other words, to increase the output because you've got spare capacity lying wasted. So I think those are all examples, G, aren't they, of the sort of it's understanding the formula that gets us to the answer of how to increase utilization.
Yeah. Matilda's just saying now, what's an example of reducing capacity? So just to reinforce what Jim said there, it could be if a business has got 2 factories, it could close one factory down, therefore theoretically halving its overall capacity. A lot of football stadiums went through a period where they weren't getting enough fans, so they would shut a stand, for example, therefore reducing the amount of fans that could attend a football ground. So, maybe if a restaurant's got three outlets, closing one, all ways of reducing, or redundancies, or lowering, redundancies is one way of lowering your staff. So, brilliant stuff. Should we have a look? We've got 2 more activities left, I think, don't we? So the problems of operating with high capacity utilization. Now, this is quite a difficult one because a lot of questions are based on the benefits of operating at high capacity utilization. But there are some benefits of not operating at high capacity utilization or even lower capacity utilization. So have a think. Any ideas of what some of the problems may be of operating at high capacity utilization.
Again, I'll keep an eye on the live chat, G, as some answers come through. These look good.
Laura's got a good point there. That's really quite interesting, actually, about employees may feel demotivated, and we could really go to town and explain that one, and alienated. So if you're working in a place that is really, really busy, really busy, whether that's a bar, a restaurant, a factory, anywhere really, you could feel a bit overworked and alienated. It could be difficult to communicate. So really good.
Awesome answers coming through on this one. This is the best yet, I think. I'll just pick a few out and put them on the screen here, G. I'm sure you can see them coming through as well. But keep an eye on the live chat. Amazing answers coming through.
No time for maintenance. That's a common one. That's a good one.
Yep.
Staff training as well. Often in times of high capacity utilization, staff training gets overlooked, which can reinforce motivational issues.
George has been busy. He spent an hour with economics, half an hour. Well, it felt like an hour with economics earlier, and has stayed online for A-level business. Great answer there. Some fantastic answers coming through here.
Yeah, sudden changes in demand, less flexibility. Yeah. So are we saying then it's actually beneficial for a business to have some spare capacity, but not so low that it has an impact on unit costs? So some of the problems that you've all identified them: demotivated staff, may becoming overworked, and experience burnout that could lead to high labour turnover, and there's costs associated with that: recruitment, retention, more training. Less flexibility, unable to handle unexpected spikes in demand. Think of seasonal businesses there. And higher maintenance and repair costs. If your machinery is working harder, it may need replacing more often. It needs to be more maintained. There's a cost with that, and if it's not maintained, that could result in breakdowns, and that could result in lower capacity utilization.
Yeah, so he's asking, is 80 to 95% optimal utilization? Well, of course, the answer is it depends on the industry, and it depends on when you measure capacity utilization. So, for example, if you've opened a new factory, chances are in the very early days, your utilization is really low whilst you get it up to speed and iron out all the production and quality issues. So it depends when you measure it. But in general, I would say between 75 and 90% is a good rate of utilization, because that gives you that nice balance between being able to, as you mentioned in the live chat, lots of people mentioned being able to respond to a sudden increase in demand, the ability to be able to make a bit more, sell a bit more, but also means that you're not completely overworking your assets. And that gives you time for things like maintenance, or if it's a people business, rest, recovery, that kind of stuff. But I don't think there is an optimal one, but I think that feels like, and I think sort of 75, 90%, that feels like you're spreading your fixed costs over a decent amount of output. So that would be my answer to that one.
Great stuff.
I think we've got one more activity, G, haven't we?
I think so, yeah. And it is Fly High Airways, which is an airline that is real and exists. It has a fleet of 50 planes and an average capacity utilization. Now, we call that in the industry passenger load factor. That is how capacity utilization plays out. So has an average capacity utilization of 65%. The industry average is 80%. So passenger load factor is just capacity utilization, really. So to improve capacity utilization, Fly High Airways is considering lowering its ticket prices. So what we'd like you to do is a bit of evaluation here. Why should they perhaps reduce their ticket prices? But what might be a negative consequence of that decision? So they're looking at reducing ticket prices. So how would that lead potentially to an increase in passengers? How might that work? But what might be a negative consequence of that? So again, really interesting to think of application here. How would you apply your answer? Because lowering prices is a common method that many businesses use, but we need this applied to the airline industry and Fly High Airways in particular. So good. Bethan's got a good point there about it would it depending if prices are price elastic.
Yeah, so I'll keep an eye on the live chat, G, as they come in, and maybe you just give us a thought and a comment on some of the contributions as they're flying in.
So in elastic and inelastic, if the lower prices, the quantity demanded will increase. It's about how much, but it's about the impact of that. So there's a lot of students picking up on it. It depends on what sort of airline Fly High Airways is. Are their tickets price elastic? Are they price inelastic? Because that may increase passenger numbers, but there may be an impact on sales revenue. So affordable flights are attractive for travellers since the airline industry is a price-sensitive market. There's a lot of truth in that, as outlined by the high capacity utilisation of Ryanair. So some really good stuff here about reducing profit and sales revenue in the short term, but could increase capacity utilisation and therefore reduce unit costs, meaning they could even lower ticket prices even further. There's some lots of really good lines of analysis here. So really good stuff. Lots of application as well. Lots of application. So I like Libby's here.
Yeah.
If they reduce ticket prices, they will sell more tickets. Therefore, their passenger load factor will be increased. However, there is less flexibility. Easy for me to say. There is less flexibility for customers, and that is brilliant, because that's the line of analysis I was thinking of about how actually if it gets really busy, overcrowded planes, queues at the check-in desk, things like that, difficult to get served on the flight. So
yeah,
that was really good. I'm really impressed. I'm really impressed with that. Yeah, really good. Should we have a look at what we?
Yep. Hard to beat, but yeah.
Hard to beat that. Hard to beat.
Here we go.
So look at the application here. Reducing ticket prices may result in passengers choosing to fly with Fly High Airways if their ticket prices are lower than rivals such as EasyJet and Ryanair. An increase in passenger numbers will result in an increase in capacity utilisation, but the extent of which will depend on price elasticity of demand. If it's price elastic, the quantity demanded will increase by a greater percentage, so therefore it'll have a bigger impact on capacity utilisation. However, there's always a however. Although it may increase capacity utilisation, if demand is price inelastic, then the percentage increase in ticket sales will be lower than the percentage decrease in price, impacting on sales revenue. But this picks up on what Libby says about maybe bigger queues at the check-in desk, more crowded flights, impacting customer service. And so some really good balance there. I think that's what we got. Really good balance. What a great session, Jim.
Whilst you're doing that, G, Will, what can we say apart from thank you very much? And that's Graham's lunch sorted. Graham is on his way down to Super Leeds to watch Leeds against Sunderland tonight, and that will pay. So that's very kind of you, Will. That will pay for your sandwich, won't it, on the service station?
Lots of comments in the chat window about the big game tonight, and I'm assuming it was talking about Leeds Sunderland, which I will be there tonight at Leeds. But I think there must be some secondary games, such as a Champions League game, maybe tonight. Who knows?
Katie was. I'll try to put it on the screen, but I've got the wrong graphic. Katie was asking, just our last question on this, Graham. Does capacity always refer to the units, or is it also about, for example, how much work can be done? I think it's a great question, isn't it? Capacity utilisation is all about the difference between actual output and potential output, but output can be, in the case of a factory, it could be units. In the case of a football game, it can be seats sold or attendance, isn't it? Grade Booster Workshops, it's how many seats, and there we do want 100% capacity utilisation in terms of those cinema suites. So yeah, utilisation is all about that relationship between how much you could sell or make in volume terms and how much you actually do, which is the top part of the calculation.
Yeah, if you look at it, it's an interesting example, because if you look at, say, like a doctor's surgery, you can apply capacity. How many patients can they see in a day? That's capacity. How many patients do they see in a day? That's capacity utilisation. So it's not always about making things. And I think sometimes when capacity utilisation questions are applied to a service industry, some students struggle a little bit because they just see it as a manufacturing concept. Well, it's so applicable to all walks of life. Just for example, Jim, at the weekend, 42,000 Sunderland fans to see Bristol City. 4,000 lower than capacity. Very busy. Big queues for the toilets and for the drinks and the snacks.
Yeah.
So it just shows how capacity utilisation is everywhere.
It certainly is. Right. Awesome. Cheers, G. And all the best to Sunderland tonight. You'll need it against Leeds. The big game tonight, of course, is Harrogate Town against Grimsby. I'll be there at the Envirovent Stadium if you're coming along to that one. Say hello. I'll be in the LED stand next to Weatherby Road. And anyway, if Graham and I both make it back from our respective games tonight, We'll be back again 12:30 tomorrow on what are we looking at tomorrow? What's our topic tomorrow? I've forgotten. It must be price elasticity of demand, is it?
It is price. It's PED, price elasticity of demand.
PED. So that's our session tomorrow at 12:30. If you can join us live, that's cool. Spread the word. Don't forget to like the session, and we'll catch you at the next live stream, which is tomorrow at 12:30. G, thanks very much, mate. See you later.
Now.